So now more market chatter with Deepak Jasani, the head of retail research at HDFC Securities. Deepak, there's no Santa Claus rally this Friday on the Lal Street, and Santa Claus was nowhere to be found on Wall Street either overnight. Look at the terrible queues that we had. But the bigger question is that as we head into 2019, what's your outlook for the equity markets? Is equity still going to be the good asset class? Should retail shareholders stay with it? Is it a time to maybe buy blue chips at a low price? The reason I'm asking you this is because 2019 is going to be maybe even more volatile than 2018.
Yeah, good afternoon. We have seen a pre-Santa Claus rally in the sense that last 7 or 8 sessions the indices have run up from the lows. From yesterday onwards, we have seen some sort of a correction, and that correction is of that earlier up move. And we still feel that in the near term, we still haven't seen the near term top. So we may make an attempt to go higher either by the end of December or early January. But post early January, I think markets could correct a bit, a little more sharply than what we have seen so far. For calendar 2019, we think that the first half of FY19 we will have a lot of issues in terms of global uncertainty, the global slowdown fears, and Q4 of last year was very good. We had a very big base, so Q4 of this year may not be Q4 of FY19 may not look so attractive. Plus around that time we also have the elections here. So from say February till May, June, the markets may remain quite volatile with a slight downward bias. Now post that a lot will depend on the outcome of the elections and how the interest rate scenario is elsewhere in the other developed markets. So in case both of them are favorable, then we may see a second half of calendar 19 rally in our markets.
So when you say that and that kind of a rally, which are the sectors that you think are going to outperform? Where is it that you're putting your money?
Yeah, but prior to that, there may be a lot of volatility. The sectors which we'll have to see as to which sectors go down more sharply from here, and then probably bottom fish in those sectors rather than taking a bet from right now to ride on the rally which is expected in the second half of CY19. But as of now, I think we like IT services as a sector. And we also like PSU banks for the very short term. So these two sectors for the near term we like.
Okay, and which are the sectors that one should stay far away from?
Yeah, so for the next 1 or 2 quarters, I think auto as a space we will like to stay away, and except for the trading opportunities that we may keep getting every now and then. Automobiles, metals is another pack because of the global slowdown fears and the situation China is facing currently. And healthcare also, we feel there is some more downside left. Of course, there we are not very bearish at this point of time. For the near term, there may be some downtrend in those stocks, and then probably some bottom formation will happen in the healthcare.
Okay, we'll leave it at that. Deepak, thanks so much for joining us here on Markets at Lunch with your crystal ball for 2019. Look forward to keep having you on the show on Markets at Lunch. Wish you a very happy new year as well.